Welcome to this very special edition of Small Cap Spotlights with me, Cheryl D'Souza. And today we will be talking with the management of Cedaar Textiles. I'm joined by Rajesh Mittal, who is the managing director of the company. Thank you so much for joining us. Let's actually start with your journey, and if you could tell us what actually led to the founding of Cedaar Textiles.
Okay, so let me give you my background. I started my career in 95. I have a graduation in computers and post-graduation in international business. I started with Vardhaman Textile Limited in Ludhiana, which is like a $1 billion company now. So I have a 9-year journey with them in the different section like planning, then domestic marketing and export marketing. And 2004 I moved into the overseas into Hong Kong and Bangladesh, where we started our own yarns and fabric business in the trading farm and supplying to the garment exporters across the globe. Out of that, 80% was in Bangladesh and 20% to the other countries. And we are doing the sourcing for last 12, 13 years from different Asian countries and supplying to them. So 2018 we moved into India, and 2020 this Cedaar come into the this come as an idea that we thought that let us try if we can have the backward integration into the manufacturing. So one of our vendor like Kothari Group, they are based in Calcutta. So they have one entity in near to Ludhiana in Punjab, and they have some other entity in near to Calcutta and some other parts of the country. So their the promoter have and the next generation having not much interest into that company for growth and for the the future. So they decided to this sell this asset in near to Ludhiana. So that idea come up, and me and my partner Mr. Goel and Mr. Monappa, we together taken a joint decision. Okay, it's to be reasonable asset for us for for the future, and we can have some venture into the manufacturing, and we can go forward. Can drive this company into a bigger entity. So that way, the idea of creation of Cedaar started, which we taken in 2020. We bought the full like the land, building and machinery full setup, and from that side, the journey for Cedaar started.
I'm sure a lot of them would want to know what exactly does Cedaar manufacture, and also if you would tell us what makes your product so unique in the textile space in particular.
Okay, Cedaar is making the different type of dyed and fancy and melanges, which are little the novelty side of the yarn manufacturing. The yarn manufacturing start with the normal raw white, and then into the different blends and different fibers to be used in gray and dyed mixed together and make little novelty and fancy effect. So yeah, the Cedaar is making little boutique type of products, which is like making as per the customized requirement of the garmenter that they need different type of for the fashion oriented yarn. So we are making that yarn, and apart from that, we are into the another high end segment of yarn dyed, which is also fashion oriented. And last year we have started into the technical textile, which is basically another industrial application where the you have to be have to be the application of protective wear, where you use this type of yarns for the anti-flame retardant, where where they are very prone to the fire area, like the aeronautical engineer in the oil companies, engineers which are using even in the public place fabrics, which are like in the home furnishing, into the hotel and the aircraft seat fabrics, the car fabrics. So this type of all application coming into the textile, although it's very high usage of different type of application, but we are concentrating at this moment the protective wear to start with. And there are different type of blends of fiber which is come originating from this specialized fiber from Japan with the trademark, and we mix and blend as per the customer requirements, and we are doing this spinning and dyeing. So that is the additional the differentiated product we are moving into, and that particular thing we are going into the value chain, and also adding the fabric business into the company. Started with the outsourcing or the out jobber of the fabric, and coming days, whenever we have after the IPO proceed, we will have our own expansion into the fabric dyeing and also the increase in capacity of the yarn dyeing, which is also fashion oriented, and we are getting a lot of opportunities and demand in that segment. So overall, this fact, Sidar is basically on the high value added side of this value chain in the textile.
So could you elaborate on Cedaar Textile's current product mix, the rationale behind its focus areas?
The major focus in is the Sidar is on the dyed yarns, on the technical textiles and the fabrics in coming days, which is like you can say our ratio is now 75-25 with the Milanges and the fancy and the other value dyed yarn. But the next focus in next 2 years is to change the ratio from 75-25 to 50-50. So we are moving up into the value chain, and that's where the value addition will happen into the company. The rationale behind this is that the normal spinning is like if I give you an example, there are 300 spinning mills in India. 90% of the spinning mills are making the basic yarns and other, like 10% is in the different part, in different the value added and differentiated products. So our focusing on the this differentiated products where there are hardly 5 or 6 suppliers in India, and that cater to that segment for the local market and the export market, and which is like our expertise in this particular segment is there because we have that last 30 years experience in the market, and we understand the market and the market requirement. So based on that, we want to be into that segment where we can have better margins and better profit for the company. So we are just focusing on that way, like you can say a boutique company, which is making different product as per the buyer requirement. And we never say no to the customer. If some say even a smaller quantity order, we understand we have a better margin. But the other company, the bigger company, have limitation. They cannot change or they cannot make smaller quantities and the smaller products. So that way we have the flexibility of production lines and flexibility of change and mix of products we can make, which others is very difficult to make.
So how do you see the demand trends across your core products categories, particularly, Mr. Mittal? Any plans to diversify further for your company?
Yeah. We, as I explained, we are already diversifying into the fabric. Even after this IPO, the object we have a plan to new expansion of 10 metric ton of fabric dyeing, and we have one the sister company where my another two partners have the garment factory in Ranchi, which is making the undergarments for jockey, approximately 1 million pieces of garments every month. So we have LOI that we will supply the fabric after the production to that factory, which will be indirectly will supply to the for the jockey production. And similarly, we have LOI with another two company who are one is near to Ludhiana and one is near to Indore, that they also interested in buying continuously the fabric production from us. So the foray of fabric production and the requirement of the in this particular area is increasing, and we are hopeful the opportunities are coming more into the Indian industry after the opening of this some new opportunities in the world about this, like the FTA happened with the UK, and then another tariff preferential discussion going on with the America, and also the government has pushing hard to complete this European FTA by end of this year. So all these things, and also some setback on the Bangladesh side because we used to buy $1 billion of a garment export from Bangladesh, and that has been little due to lead time and other things because of the stoppage on the yarn on the Benapole side by road. So all these things will make the things better to the industry and competitive to the industry compared to the our nearby garment producing countries. Which is like in China, Bangladesh, and Vietnam. So India will have an edge on that, and I hope the industry demand will is going to increase, and India will be able to increase the share, which was almost stagnant for last few years if we see the data.
So let's talk about your current installed capacity across your product lines. If you could help us understand what is the average utilization rate right now?
Our installed capacity is approximately 11,000 metric ton per annum, and we are utilizing approximately 80% of our capacity at this moment.
Right. So, which segment of your operations is operating near full capacity, or maybe you could say they're contributing the most to your top line growth?
The yarn dyeing, yeah, the yarn dyeing is operating almost like a full capacity. That's why we have a lot of booking and orders coming and like in the pipeline, and the buyers are also asking. That's why, and the EBITDA margin is also good. So we are basically that's why we are expanding into that particular segment, which is more fashion oriented. And the normal, the spinning capacities are, normally can go up to 92% on an average basis. So there we are at this moment up to 80% we are achieving.
So let's talk about the most important news aspect, right? How do you expect the India-UK free trade agreement actually to benefit Cedaar, especially in terms of export competitiveness?
There was a 12% duty to for the India export to UK, which will not be there, I think, after September, when this FTA will be effective. The China has same the 12% duty, and also Vietnam has to pay the duty. Bangladesh, okay, is apple to apple with us after this FTA, but India still have some incentive in the form of now the government has some drawback and the road tap which they give to the industry around 5 to 6%. So that will be one advantage to the India. And another, the raw material. Bangladesh still import the cotton and other things from the outside. India has the indigenous, all these raw materials and things. So I think India in the long run, in the coming years, should be having a better competitiveness as compared to Bangladesh. But the main challenge is that we need to create a big setups as in Bangladesh to give a comfort to the customer that yes, India can also make the bigger quantities which they need for their in the supply chain. So that is the one challenge the companies in India will have, and they have to set up in that area where the availability of worker is there and should be also logistically should not be very costly for them. So like you have said, you've seen that the government has given in some states like Odisha, Jharkhand, even MP, Chhattisgarh also coming up, Telangana. So these different states are giving, some good subsidies and incentives to the industry to set up in a big way so that it will generate the employment also, and it will also create bigger capacity, which is the basically the requirement of the buyer. So if as a country we are able to create big setups like the Bangladesh and Vietnam and China have, then there is no way that we cannot increase. We have now doing approximately $1 billion of export to UK. I think in next 3 to 4 years it can be achieved at least $3 to $4 billion if we start expanding, looking into the opportunity available to us.
So that brings me to my next question. Have you initiated any groundwork to enter or scale up the presence in the UK market post the signing of the FTA?
Yeah, actually, as a company, we are planning to go into the. Actually, it is not part of our DRHP, so I'm not mentioning it. But we have a plan in future to go into the government, and we once we go into the government into B2B, then we will obviously will approach all the brands in UK also to supply the garments from India. That is our plan in next 6 to 9 months to come into that segment also.
Right. Given Bangladesh's strong textile ecosystem, do you see collaboration or competition from players there right now?
Yeah, of course, the competition from Bangladesh will be there, but we need to understand the Bangladesh is exporting $45 billion of export, and like Vietnam is around 50 billion, and China is approximately 180 billion. So thing is that the Bangladesh, how much business will be going to India? I don't feel it will be going very big shift to India, but the China business, which is having a lot of duty, so that segment from 180 billion, there's a huge potential for India to increase. So because the China labor cost is like $600 to $800, although they have some incentive from the government, but looking into this FTA agreement where they will have another 12% of differentiation in India. So I am hopeful that India will able to increase our share not from the Bangladesh side, I think more from the China side.
And where do you see Cedaar Textiles in the next 5 years when you talk in terms of the market share, the geography served?
Siddharth, vision is to move into the vertical line up to the garment in B2B and also to start a brand in future in any category of domestic market catering on the high or medium segment. We are planning for an athleisure brand. So our planning is to go up to the vertical line, up to the B2B into the garment for supplying to the brands and also for our own brand in some particular category. So we are looking at 5 year down the line. If we are able to plan as per our as per our internal strategies, then we should close something around 900 to 1000 crore of turnover also. Because if we move into the garment very fast, there the capex to the turnover is 1:9. So that will give you a very good organic growth, and the buyers are looking for a good factories where they can rely for a continuous supply of the garments for their requirement within within India and outside India, because in India also they are growing in the farm of stores. So I'm hopeful that if we will stick to our plans and we will have the things in order, we will able to try to achieve that level.
Like, can you share the details of the brownfield expansion then, your capacity addition, timelines, and expected ROI?
Yeah, like our expansions will happen within 3 to 6 months of what we have, planning as per the proceeds from the IPO, and out of that, the expansion at least 40 to 45% of the benefit we will able to take in 25-26, and rest will go into 26-27. The beauty with our factory is that we have the infrastructure ready, like building and land and building. So we need to only invest into the capex for the machinery and some part in the utilities. So if somebody has to put up today a new plant, they have to invest like 100 crore. Maybe we have to invest 40-45 crore to achieve the same capacity. So that is basically we need to have the less capex and the ROE will be better. So I'm hopeful that after this all the utilization with the new expansion, our EBITDA and margins will increase by 3 to 4%, and PAT will be approximately should increase by 2 to 2.5%.
Right. So, how is your brownfield expansion helping you? Let's try and understand, especially when you talk about optimizing your capex or, for the matter of fact, ramp up scale efficiently.
Yeah, the new machines what expansion we are doing in the dyeing, like currently whatever the machine we have, that is having a ratio of like a equal ratio of 1 to 8. Like 1 kg of dyeing, we have to use 8 liter of water. But the new machines are almost half of that the utility and the requirement and the water requirement, and that accordingly will reduce the further dyes, chemical, and other costs required. So obviously, this is giving the efficiency and the cost saving for us in the process in the operational, and that itself will bring in further economics of scale and will have a the overall more operational efficiencies into the company.
So, could you help share with us the impact of your captive solar energy initiatives, right? Especially when you talk about operational cost savings as well as margins?
Currently we have 2 megawatt of solar, and that is approximately saving 14% of our cost from the energy part. After this IPO, we have another plan to add another 2 megawatts, so they will save another 14%. So 28 to 30% of our requirement at this moment, is been set off with the solar. So we are saving approximately 30%, mean it will save approximately 5 crore of our energy cost in a year, and that much it will be added to your margins. So we have a 4 year payback for all this the solar energy, and the life of the solar is like 20 to 25 years. So we will the company is getting into the better efficiencies with adding the solar, and we'll able to add more to the margin, and we reduce our cost. So it is a good I think good thing for the company in the long run.
So does the company currently hold a surplus or strategically located land on its books?
Yeah, we have like total 48 acre of land, and we are still using only 20 acre of land. 28 acre of land is still, with us for any new expansion. We don't have to invest too much on the land acquisition or the building. Also, we have still for new expansion everything. So, means that asset base will help us in, not on the capex on the land and building. It will be only required for the expansion in the machinery and utility. So, our capex, new capex cost will be very less as compared to any other new company, and which will give a better ROI to the company and the shareholders in the long term.
So let me ask you the next question. Are there any monetization or development plans or related to existing land assets?
At this moment, there is no assets plan for that to monetize on the land. At this moment, we are looking at how we can make more growth by adding some more different type of the business related to textile in that, and utilize it.
All right. And then looks like we just have time for these many questions. Thank you so much, Mr. Mittal, for joining us today on this very special edition of Small Cap Spotlights, where you actually put the spotlight on Cedaar Textiles to help our viewers to understand more about your company. Thank you so much.